Hello guys, welcome to the last trading day of 2017. So we are facing the new year 2018. So after last video, some of you guys asked about how can I calculate the rental yield, and some of you, maybe myself, sometimes I know what to do, but I always forget something to be included in the expenses, and then I will miscalculate something. So why do we calculate rental yield? That's the one reason. The second reason is how. Okay. So first of all, if you're new to my channel, please subscribe to our YouTube channel. We always talk about housing, forex market, and majorly always stocks. Okay, because I think we are experiencing the bull market, bull economy cycle expansion. So I think it's conservative to be aggressive, if you understand what I mean. Otherwise, people always do it another way. For example, when in 2007, the stock market, housing market always peaked every single month or every single week, and then people start believing it won't never come down. So that is the time when you invest in anything. Even if you invest in good assets such as housing, the housing market, you can also lose money big time because it's leverage, right? So I think it's okay right now. The bubble is here, but the bubble is not going to burst in at least 1 year. I'll talk about that soon, because my worst formula is that if the Fed chairman Powell is going to raise the interest rate really fast, really quickly, I think the worst case is that we will experience a recession in the very end of 2018. But it depends. Okay, so right now it's around 3 to 4% interest rate in US for the next year, which is fine. Okay, so how should we calculate rental yield? Is your rental income monthly, and then times monthly, and then times 12. If that's weekly, times 52. Okay, but that is in a general rule of thumb. But for example, you calculate that it should be 5%, right? But you have to deduct, if that's a condo or apartment, you have to deduct the management fee, and also if you're new to purchasing that the house or the apartment, and then you have to calculate the renovation and also the lawyer's fees, and also case by case, depends on the countries, you may have to pay the stamp duty and the tax and the appreciation tax, stuff like that, which in the previous video I talk about which countries they do not have high tax. So it's pretty good to at least the formula is more clear. Okay, so that is the rental yield, but you have to deduct some of the expenses. So if in terms of calculating your return, you should open the mortgage calculator. Okay, so you can open it. I believe you just search mortgage calculator. There are many options that you can choose from. For example, this one you can because right now, as of this moment, 1 hour ago, I went to the ambassador of Malaysia, because I finalized my deal of purchasing 2 units in Malaysia, which is pre-construction. I know I talk about how bad is pre-construction, but it's case by case. In Hong Kong, it's really bad. They always the developer always win. And in Canada, yeah, more or less the same case, but in Malaysia is a little bit better. So it all comes to whether or not the after the construction is finished, is the market still good? That is the main question, right? So for example, I purchased it. Of course, is an HKD, right? But you can ignore the unit, because in the end it canceled out, right? If that's Canadian, you just plug in Canadian, you don't have to convert anything. So for example, in the Malaysia, the units I bought, one of the units is 1.3 million, which is in ringgit. We say it ringgit, but they say ringgit like that. Anyway, you have to whenever you in the country, you have to say that. In Hong Kong, you say Hong Kong dollar, like that. Okay, that's really the case. I can't help. For example, for foreigner, maximum you can loan is 80%. So for me, I know the best case, if I can loan the most, that is for me the best case. But now I want to compare the rental yield, rental rental income can cover majority or all of the mortgage costs, right? So now if I plug in the higher number of the mortgage, it is the worst case. You know what I mean? Because if you plug in 80%, you have to pay more monthly for the mortgage. It's harder for the rental expense to cover that completely. So that is really a downside for me. So whenever you do an investment, including business, you always measure the downside risk, the maximum risk you would want to measure. Because if you measure the return, it's useless. Because we always love the return, right? But we always forgot about the downside, and usually it always catches us off guard. Okay. And the loan amount would be this, and the interest rate, that's another key question. You can go to tradingeconomics.com, and then usually they have the interest rate, not usually, all the case, they will have the current interest rate right now. For example, right now Malaysia is 3%, and usually you have to add 1 to 2%, usually 1.8 to 2%. On top of that, that is your mortgage fee. So if you are not sure, you can search Malaysia mortgage fee. You can choose a higher one. So right now it's 4.8. Around 4.8 is around 3 plus 1.8 is 4.8. So you plug it in, and then I would usually plug 25 years, unless you're not young anymore, because I'm turning the next round up age I am is 40. So 25 is okay, because 25 plus 40 is 65, but I'm not 40, okay? So run. Now, boom, you know the down payment, you have to pay 260,000, which I know, and then the monthly repayment is $5,900, it's like $6,000. So that's the worst case scenario. But that's the best case scenario for me to leverage, but it's the worst case scenario for the rental income to outperform it or to cover the mortgage cost, right? So now do the math. Because my pre-construction is 500 meters beside the Twin Tower, is pretty close. If I'm not doing Airbnb and stuff, I would already have 6% rental yield. It's really low already, including the management fee. So I would save, let's say 6%, right? So I would say 1 million and 1.3 million divided by times 0.06, meaning 6%, right? So it's 78,000, and then divided by 12, each one I get 6,500. Boom. And so that is the worst case scenario. As long as you can get 260 ringgit, and then not only that you can cover your mortgage costs, also that you can generate positive cash flow. It's better than saving something, accumulating something. That's really a good choice. That is exactly why I'm going to make this decision. And why would Malaysia having a great rental yield? There are two reasons. First of all, the political problems and also the oversupply problems, making the Malaysia market, the housing market, the prices are not moving as much in the past 3 years. So, but the rental is going up, right? Because I still have the rent, people still have to work in Malaysia, stuff like that. But, and the second reason, but once you go outside of the heart of the Kuala Lumpur, it's really cheap. That calculation will be all really bad, okay? So you have to understand the market yourself. So this is a good choice. For example, I would say, maybe deduct this and that. Maybe I will minus every 12 months. There are 2 months I can rent it out, stuff like that. Let's say it's 4. Let's say it's 4%, right? That's fine. That's fine, right? Divided by 12. That's the worst case of the worst case. Then each month I will get around 100 and some dollars ringgit, which is around a few $100 US dollar, and then you are already saving up your money in an apartment, which is really hard for it to go to zero, right? For example, if it's Canada, and another house I'm looking at in Canada is 1 million max. I think 1 million is what I can get Canadian dollars. And then I've done the pre-approval that I can get, because they do not really count your overseas credit. They only count whatever money you borrowed in that country. Usually that's the case. So I'm all clean. Okay. So after pre-approval, I've done it already with HSBC. It's 80%. I'm very sure. Okay. So I'm pretty sure that I will also leverage it that much. And then, 1 million. Okay, 1 million. And then the interest rate, again, you look at the Canadian interest rate is 0.75, and then plus 1 or 2, maximum you can say is 2.75. But around, I search it online, it's around 2.6, something like that. But I can plug in the worst case scenario for myself, and then 25 years run. Okay, so that's $3,690 per month. But in Canada, if you buy a house, the rental is really low. It's around 2.5. Yes, 2.5. Trust me, it's so bad. It's so bad. Divided by 12, same as in Australia and in America. If the house is like that, it's only 2,000. So every month I have to get another 1,000 some Canadian dollars. That is pretty much a lot. So for this reason, I'm buying a house in Canada because my family is maybe going back in 2 to 3 years. So I'm not taking the risk that I have to chase the price at that time. At least, no matter what happens, in the next couple of years, I really have a small, tiny house that I can live. But I'm telling you, this is the area which is the top one high school, having the top one high school in that Toronto Markham area. So in general, $1 million is still you can buy a 2 garage or maybe 3 garage, 5 bedrooms in Canada. But so don't get me wrong, it's not that expensive. But I still want the price to go up, right? So I will prepare myself that the rental income will not cover the mortgage cost. So that you can make a correct decision. That's all about it. Because buying a house, investing in housing market is really easy. It's all about the calculation and the maximum downside risk that you have to measure. So that's basically the update. Hopefully it's helpful to you guys. If that's helpful, please give me a thumbs up and also share this video to your friends. If you anything to add to that, for example, your country is really special, no tax, stuff like that, I maybe for me or other subscribers can also take a reference of, and maybe we invest in there, right? So you can add the comments in the comment box below. So investing made easy. I'll see you next time. Happy New Year. Bye bye.